Senator Vitter, thanks so much for sitting down with us to talk about the new Fed Chairwoman, Janet Yellen.
Thank you, Joe.
You had the opportunity to speak directly to her. One of the big things that you addressed were community banks, and that many Fed governors, presidents of the regional banks are not, don't have experience in community banks.
Right.
Though Janet Yellen did mention that Governor Sarah Bloom Raskin,
right,
who she does seem to work with a lot and does like, say that she respected her work and said she hopes that the Obama administration does appoint someone in her place with that community bank experience. Were you happy to hear about that?
I was happy with her comments. I'd like to sort of institutionalize that and have that as a statutory requirement for at least one member of the board.
Why is that?
To ensure that that happens over time. Look, there's been a big, clear long-term trend in favor of more academic economists and against folks with various types of real-world experience, certainly including community banks or community bank supervisors. That's an important part of our financial system. I think it's a very valuable part of our financial system, and we don't have that regularly represented or adequately represented on the board. And the one member there who has that experience now is leaving, the person, Ms. Raskin, she was talking about. So I'd like to try to institutionalize that.
You and Senator Brown last year came out with a proposal for an amendment, a too big to fail amendment. You wanted larger capital ratios, leverage ratios. Senator Brown, in fact, gave you a hat tip at the end of your comments. It seems like the both of you are very much about kind of reducing the leverage of the big banks, focusing more on the strength of community banks. Can you tell us why you do care so much about strengthening community banks when there is far more of an influence both here and abroad of our larger financial service institutions?
Well, it's not about one versus the other. It's really about too big to fail. And are we going to have that problem in the future? I don't think we've solved too big to fail at all.
You don't?
In fact, in many ways, I think we've institutionalized it. And I'm very concerned about that. So our ideas about higher capital requirements for mega banks is to solve or help solve the too big to fail problem.
And when you asked Janet Yellen about these capital ratios, you'd asked specifically on derivatives, right, and the repurchase programs, if she would really come out with a strong proposal. She kind of alluded the question, but she did say that she supported strong regulations on them. Right. Do you actually think that this will come about from the Fed?
I'm hopeful based on our comments today. Let me back up. You know, what's happened is Sherrod Brown and I have had our bill that has a higher requirement for leverage ratios, capital requirements.
Than the DoddFrank proposal.
Yeah, DoddFrank has no absolute requirement, gives discretion to regulators like the Fed. And so our bill would greatly increase the capital requirements for mega banks. Somewhat in reaction to that and to other parts of the discussion, the Fed came out with a draft proposal that moved in that direction. Didn't go as far as our bill, but moved in that direction. And that's been a draft for several months, and they're moving slowly toward finalizing it in a rule. Since their draft, Europe has been backing away somewhat in the Basel III discussion from much stronger requirements. And so what I was asking today is, are you going to stay at least as strong as your draft? Or are you going to start backing up? I'm concerned that they would back up any, because I'd like to see them even go further. She seemed to indicate that they would stay at least as strong as their draft. I hope that's the case.
It does seem, when the discussion of Republicans versus Democrats and the way that they approach central banking, the argument goes, well, the Republicans, they look at the Federal Reserve as being too loose with monetary policy. Democrats look at the Fed and say that they've generally done a pretty good job. Yourself and Senator Brown seem to be kind of at a middle ground. Where are you going to continue to, I mean, it seems like you on the whole do think that the Fed has handled, in the aftermath of the financial crisis, monetary policy pretty well.
Well, I wouldn't say that, actually. I think Sherrod and I disagree about monetary policy and about a lot of fiscal policy before Congress, the way you've described, most Republicans and most Democrats disagreeing. What we've come together on is a pretty different topic, which is too big to fail and higher capital standards. So that's what we've come together on, and I think a lot of folks from all points of the political and the banking spectrum do think we need to do something about too big to fail, and I think capital requirements is a good way to do it.
So then what worries you most about Janet Yellen leading the Fed now?
Well, you know, she's largely, I think, a continuation of Ben Bernanke in terms of large areas of policy.
You think that's bad?
Well, I don't think this zero interest rate policy, this free money policy, is sustainable. I mean, I think it's a sugar high, and a lot of folks like sugar highs, and a lot of folks are enjoying the sugar high on the stock market. But I think there's going to be a day of reckoning, and I'm concerned about how gently and carefully we can come off of that and avoid serious inflation.
So despite the current pace of pulling back in the economic stimulus program, and Janet Yellen told us today that they're probably going to continue at the same pace so long as we don't see a huge change in the economy, you're still not convinced that this
Well, that's movement in the right direction, certainly. But I've been concerned about quantitative easing and their zero interest rate policies for a while. And I do think it's building up pressure for higher interest rates in the future.
Were you satisfied with her response? You did press her again. When are you going to instate these new rules, of DoddFrank, consumer protection? And she said, in the not too distant future. You probably hear those things a lot here in Congress. I mean, was that really a settling comment from her to you?
I wasn't surprised. I didn't expect for her to name a date. I was encouraged that it sounds like it will be pretty soon, but obviously there's no assurance that the not too distant future is in 2 years instead of 2 months.
A quick overall summary between what you heard from her today, Senate Banking Committee, what you heard from her 2 weeks ago in the House Financial Services Committee. What's your overall takeaway? How you felt about her, real kind of first public response?
Right. It was about what I expected, and I'm certainly glad she's winding down this monetary policy, but I still have concerns about where that could lead in terms of interest rates. In terms of issues like too big to fail, I'd like her to be more aggressive. And Sherrod Brown and I have
You think
proposals.
she will be?
I don't.
You don't?
I think they're going to sort of stay pat with the capital leverage ratios they're discussing. We're going to keep pushing our bill to go further in that direction.
She has been in numerous reports from different news outlets, someone focused on the income inequality issue, something that Ben Bernanke didn't necessarily ignore, but the argument is that Janet Yellen will be more vocal about it. What's your take?
Well, I hope she is, and I hope we all focus on what I think is the root cause of that, because it goes directly to monetary policy, what we're talking about. Higher income folks benefit more from the stock market, and so this monetary policy has put that on a sugar high, and they're benefiting. Meanwhile, the sort of real economy is very mediocre because of over-regulation, over-taxation, things coming out of Washington, big government policy out of Washington. That, I think, is the fundamental reason for this inequality, and I hope we have that discussion.
What have people from Louisiana been telling you in regards to Fed policy?
Well, they're not involved in the details of the Fed, but they want the real economy to grow. Stock market's great, and a lot of people participate in the stock market through retirement accounts and everything else, but they want the job market to grow first and foremost, and that's what's really mediocre.
All right, Senator Vitter, thanks so much for sitting with us.
Thank you.